in EMEA. So from Russia down to South Africa, you've got here a post-election government trying to push through reform. That's a positive. And thirdly, credit growth, which for the last 2 or 3 years, banks have not been lending. We think by later this year, that credit growth is going to be picking up. When banks lend money, asset prices tend to rise, equities or land. So we think that these opportunities are quite positive for Nigeria.
Now, in terms of security, we have a lot of security threats currently going on in Nigeria. And what is your opinion on that? How is it affecting investment potential and growth for the region?
We did some work on this a few years ago, and apart from the tragic human cost of terrorist incidents, in terms of it having a real impact on the economy, forcing governments to change policy, it's a failed strategy. You don't see an impact. Even in countries like Indonesia, Turkey or Russia, all of which have experienced pretty awful terrorist outrages in the last 20 years. There's no big impact on the economy. Investors seem to be able to see through that. I wonder whether they might be deterred from investing somewhere because of the noise, but I think any investor who's already looked at a country, who's already invested in a country, they recognize terrorism for what it is, something which has hit the UK in the past, the US, and many, many emerging markets.
So in your opinion, it's not a crisis scenario that would stop FDI?
It is unlikely to be. It's not something, I've not been able to find any strong link anywhere except Israel between 2002 and 2003. But that was a sustained intifada where the entire, well, much of the Palestinian population was on the streets. It's not that sort of situation. In a normal terrorism, in those awful situations we've had in Indonesia and Russia and Turkey, where there's a bombing every now and again, no, it doesn't seem to impact on FDI.
Okay, but there has been a lot of talk about the effects of terrorism affecting investment in Nigeria. Now, you're saying that that really isn't an issue. So what is hindering our investment potential and our growth?
I think for foreign direct investment, there's a whole host of issues. Ease of doing business, lack of electricity. There's a number of problems that the government needs to be addressing and perhaps is trying to address. In terms of portfolio investors, guys buying shares, they want liquidity. Unfortunately, there's a growth story they can see it, but when markets are having a disastrous time as they have in the last few weeks, you want to be able to get out of the market you're in if necessary. And Nigeria is not the most liquid market. As a frontier market, like other frontier markets, it doesn't have that liquidity. So it's easier for investors to be in bigger markets like Brazil, India, Russia, or just play safe, buy US treasuries.
Okay, so what do we do in terms of making it easier? Not that we want investors to leave our market, but if they need to.
I don't think there's much that can be done short term. This isn't a short-term process. The government has made progress on things like protecting investors' rights. Nigeria comes out really quite well in the World Bank ease of doing business. It's 65th in the world, same as Turkey, better than Russia. Nigeria's actually done improvements on that area, but it takes time. It takes time, and the more people get more used to the story, and I am seeing that. I'm seeing investors looking more and more seriously at Sub-Sahara. I think most people do have an interest that wasn't there 5, 6 years ago.